Alright everyone, and welcome back to the channel for another update on the markets and the VIX. So recently on this channel, we've been looking at a few different fractals back in 2008. We've been highlighting the similarities between the 2008 financial crisis caused by these subprime mortgages, and we've been overlaying what happened in the stock market in 2008 over what's happening in the stock market right now. Now, while we've been doing this has been making me think, what other similarities can we draw from back in 2008? And this has led me to today's video idea, where we're going to be looking at the 2008 VIX fractal and seeing if this can tell us anything about the potential future direction of the VIX in the immediate short term. Let's jump right into today's video. Now, jumping into the VIX, I'm hoping that all of you watching this video are well versed in the VIX and are seasoned veterans of the channel already. If you're not a seasoned veteran of the channel or you haven't heard of the VIX before, warm welcome to the channel. I will leave a link down below to Investopedia, everything you need to know about the VIX. But just a simple breakdown, what you really need to know about the VIX is it is the volatility index for the S&P 500. What this basically means in layman's terms is as the VIX goes to the upside, expect more volatility in the traditional markets in the S&P 500. When the VIX is going to the upside as well, people are buying options, the price of options are going to increase. This subsequently means people are trying to de-risk themselves for a move to the downside. And as you can imagine, as the VIX goes up, if people are hedging their bets in options, we can subsequently expect a breakdown in the traditional markets very soon. The VIX does this by creating a 30-day forward chart to represent the volatility that will be incoming in the traditional markets. Now, with that being said, if we clear everything up, you can clearly see if we overlay the SPY over the VIX, what you'll notice is over here you can see the tops in the VIX almost always correlate to the exact bottoms in the SPY. And once again, this makes sense because as the VIX is going up, volatility in the market is increasing and people are hedging their bets for a move to the downside. So with a big run up in the VIX, investor confidence is going down, the volatility of the markets is going to go up, and you can expect that the bottom is not too far away. Now, on the flip side of this, you can see as the VIX starts to come down to the downside and break down over time, this is when the stock market starts to run back up. And also, if we do look at this, you can see the peak in the stock market in 2021, December 2021, when the SPY did top out. You can see that this correlated to the start of a new uptrend over in the VIX. So now, hopefully, everyone is very well versed in what the VIX is, what the VIX does. I'm hoping if you didn't know anything about it, you've gone over to Investopedia and checked that out. But with that being said, looking at the chart, what I want to highlight is what happened over in 2007, 2008 to start with. Now, this uptrend in the VIX was started in 2007, late 2006, and this was really because of the subprime mortgage crisis, which I won't get into for this video. It's a little bit out of the depths of this, but nonetheless, this is basically what caused the 2008 financial crisis. And as this subprime mortgage crisis was gearing up and gearing up and gearing up, investor fear was going through the roof, the volatility index for the S&P was going through the roof. And while this was happening, you can basically see, round about this early to late 2007, basically throughout 2007, the stock market was topping out and we were starting to head down into the 2008 financial crisis. This was all happening while the VIX was making higher lows, higher lows, higher lows, and getting ready to go on its run to the upside instead of the SPY, which did the complete opposite. Now, why we're interested in this is when you're looking at what happened in 2007, 2008, yes, this was a financial crisis caused by a subprime mortgage crisis, which is not what we're experiencing right now. But what we are experiencing right now in 2021 to 2022, I say both of these years because we have been increasing in energy costs. There's a massive energy crisis going on right now for the past year. There's been massive problems with supply and demand all over the US. There's potential war on the horizon. There's just so many things that could be going on. I mean, saying energy crisis ECT is really just scratching the surface on this. But nonetheless, we're not here to discuss why we are in a recession right now. We're not here to discuss why the subprime mortgage of 2008 happened. We're here to look at the similarities between the VIX within both of these events. Now, like I said, it's very similar. You've got financial crises going through the economies back in 2008 and back in 2021 to 2022. With this, you witnessed a very large uptrend in the VIX. Now, if we look at the VIX from 2008, you can see that the lows came from right down here, and up until your highs, it took 700 days to build up this trend and then go on a massive run to the upside. But what you can see is it took about 670 to, around about 670 days to really start gearing up for this move to the upside. Now, how long have we been accumulating on this uptrend? I'm actually going to do it from where we started right here. We have been doing it for 457 days. Now, there's definitely a few arguments to be made with this from where you would even place the fractal, because bear in mind as well, from down here in January of 2020, you've been making higher lows, and you've been making higher lows since 2017. So when you're looking at these two fractals, I don't think there's a 100% black and white, this is exactly where you should be placing the fractal from. I definitely think there's arguments to be made from looking at when the financial crisis was confirmed, when we had that back-to-back negative GDP. There's an argument to be made to line up the fractals from the top, or in this instance, to line them up from the bottoms and see how this plays out. So this is what I want to do at this moment in time. Let's take a grab of this uptrend that we had from 2007 that led into the 2008 crisis, and let's correlate, or let's extrapolate and place the exact low on the monthly time frame from what happened on the VIX all the way back down here. Let's place it on what is happening right now in 2022, and let's see what this could potentially yield. Now, this is very, very similar. You're witnessing the same kind of choppy momentum as you're building up. You've got these higher lows, higher lows, higher lows, big exuberant runs to the upside, and then big runs back down to this uptrending line of support before a run to the upside. Now, if we're looking at what happened over on the VIX here, according to this 2007-2008 recession fractal, we should be getting ready for the next major leg to the upside on the VIX on the 31st of October, meaning we've got about another 2 months for the VIX to trend sideways on this uptrending line of support before we go on this parabolic run to the upside. And looking at what happened in the VIX back here, if this is going to play out, then we shouldn't expect the VIX to top out until the 3rd of April 2023, which, yes, basically means for the next 8 months we should be expecting the VIX to make higher lows and higher highs, and with this we should be expecting the stock market to keep on making lower lows and lower highs. Now, if we do look at what happened in the 2008 financial crisis, this one is a lot easier looking at the SPX fractal. It's a lot less unarguable as to where you should draw this from. I mean, if we are looking at the 2008 recession, then surely we should plot this from the start of the actual bear market. And this is exactly what I've done on this 2008 SPX fractal. And with this, the estimated bottom according to this fractal should be, once again, down here at the 30th of May 2023, a month after the VIX would have topped out, once again, according to what we're looking at with the 2008 VIX fractal. So this is just a rough idea. According to this, we should be topping out round about Q2 of 2023. So yeah, this is just a rough idea. I'm definitely down for having a debate down below. If any of you think this should be drawn from a different perspective, let me know what you think of this down below. And like I said, this basically means if the VIX is going to be continuing to move to the upside, making higher lows and higher highs, then the SPX should continue breaking down to the downside once again until April or May of 2023. This is not per se my prediction, but I am interested in hearing your thoughts on this down below. And like I said, while this is not my prediction, I personally do think there is a very, very high likelihood that something like this plays out. This is actually my prediction, that we're going to take another massive run to the upside on the VIX. I have been saying I believe the bottom for Bitcoin in the stock market is going to be coming in round about Q4. This could potentially elongate into next year Q1. And once again, like I said, the only disagreement I have with this fractal is that it's going to take about another 8 to 9 months for the bottom to be in. I personally don't think it's going to be that long, but I do think a move like this, where we do have another massive leg to the upside for the VIX, is right round the corner, and this is personally what I've got my money on. So like I said, I'm interested to hear your thoughts on this down below. As always, my friends, that is all I've got for you for this episode, and as always, cowboy out. Peace.